Listen very carefully, because what I'm about to tell you will decide whether you survive the next global collapse or become another forgotten casualty of a cycle that has repeated for 100 years. Every financial disaster you've ever heard about, 1929, 2008, dot-com burst, even the silent crashes no one talks about. They all had one pattern, one blueprint, one mathematical truth. And right now, in 2025, that same pattern is not forming. It is already complete. For the last 12 months, you've been told everything is fine. The markets are strong. The economy is resilient. But history whispers a darker message. A message every empire has ignored right before it fell. The moment of calm is always the moment before collapse. In the roaring 1920s, people believed wealth could never disappear. In 2007, people believed houses could never fall. In 2021, they believed stimulus money was free. And in 2025, we are watching the greatest global illusion of stability ever engineered. Stocks at record highs, bonds at record lows, real estate at impossible valuations. Debt touching the sky. This isn't growth. This isn't prosperity. This is the final stage of the everything bubble. A bubble so big that when it bursts, it won't just wipe out markets. It will wipe out the system that created those markets. And here's the terrifying part. Every economist who warned about 1929, every analyst who warned about 2008, every historian who studied collapses, they all agree the setup we have right now is worse. Much worse. Why? Because in 1929 and 2008, governments had tools to fight the crisis. They had bullets left in the chamber. Today, there is nothing left. Interest rates are already stretched. Debt is already unpayable. Money printing is already maxed out. The machine is overheating. The wheels are shaking, and the brakes are already gone. And the world is pretending not to see it. But the pattern is there. The same mathematical sequence that triggers every major collapse. A bubble too big. A society addicted to cheap credit. A government drowning in debt. A sudden trigger no one expects. And a 5-stage crash that destroys everything in its path. This documentary will show you how it will begin, how it will spread, and why 2026 to 2027 may be remembered as the darkest financial years of our lifetime. This is not prediction. This is not prophecy. This is pattern recognition. Welcome to the story of the coming collapse, and the first chapter begins exactly where every historical crisis began. Denial. Every great collapse begins with a bubble. But what we have today is something far more dangerous. Not a stock bubble. Not a housing bubble. Not a bond bubble. We are living inside the everything bubble. The largest synchronized overvaluation of assets in human history. To understand how catastrophic this is, you need to see how all 3 pillars of the global economy have been inflated to breaking point. Stocks the illusion of infinite growth. The market looks unstoppable. Record highs, record profits, record optimism. But underneath a rotten foundation, the S&P 500, as of early 2025, is trading at levels only seen twice before. 1929, 2000, both times, a catastrophic crash followed. Pay ratios at extremes. Tech giants holding the entire index up like fragile pillars. Just 7 companies controlled nearly 1/3 of the total market value. One bad earnings report, one regulatory hit, one shift in sentiment, and the entire market can free fall 50% or more. This isn't growth. This is concentration risk, the same silent killer that triggered every major downturn in the past century. Real estate, the most dangerous housing market ever recorded in 2008. Housing was overvalued by 35%. That was enough to bring the world to its knees. Today, homes are overvalued by 50%. Interest rates doubled. Affordability destroyed. Buyers stretched thinner than glass. The average person can no longer buy the average home. The exact same condition present in every housing crash in history. And yet, people still believe real estate only goes up. The same sentence repeated in every bubble ever. Government debt, the final stage before collapse. The most dangerous part isn't stocks. It isn't homes. It is government debt. The United States, the engine of the global economy, is buried under $36 trillion of unpayable obligations. Debt to GDP, 125%, worse than Greece before its collapse, worse than Mexico before its default, worse than Rome before it imploded. And here's the chilling reality. For the first time in modern history, the world's reserve currency is at risk of defaulting not by choice, but by mathematics. This is why every expert who truly understands the system is terrified of one thing. Asterisk. The global debt pyramid is too big to sustain and too interconnected to unwind safely. Asterisk. When one part fails, everything fails. The biggest lie of 2025, the world believes this bubble can be managed, controlled, soft-landed. But history tells us something different. Every bubble is obvious in hindsight. Every society denies the danger. Every expert says this time is different. And every time it ends the same way, with a trigger no one expects. And that trigger is coming right now. The pressure is building beneath the surface. Silent, unavoidable. Because this bubble cannot pop softly. It can only burst violently. And that explosion begins exactly where every financial nightmare begins, where the cracks form first, where the weakest structures start to fail, where illusions can no longer hold the weight of reality. Welcome to the next chapter. Every bubble in history ends the same way, not with a warning, not with a slow decline, but with a single trigger that strikes when no one is ready. And right now, the world is sitting on 3 loaded detonators, each powerful enough to start the 2026 to 2027 cascade on its own. But if even one goes off, the entire global system will follow. Let's begin. The commercial real estate collapse, the most predictable crisis of a generation. Office towers empty, companies downsizing, remote work destroying traditional demand, yet trillions of dollars in loans still need to be paid back. Here's the bomb. $2 trillion in commercial real estate loans are coming due in 2025 to 2026. These loans were created when interest rates were near zero. Now they must be refinanced at 3 or 4 higher rates. Impossible. Mathematically impossible. Already, giants like Brookfield and Blackstone have started defaulting. Small banks, regional banks are the most exposed. If these loans begin to fail, hundreds of banks could collapse, triggering a chain reaction, just like 2008, but deeper and faster. This is the first pin. The corporate debt tsunami, the hidden monster beneath the surface. Corporations borrowed trillions during the pandemic at near zero interest. Unlimited leverage, cheap money, unlimited risk-taking. Now those loans must be refinanced. Not at 1%, not at 3%, but at 7 to 9%. Most companies cannot survive this. Zombie corporateness, barely alive for years, will die instantly when refinancing hits. When they fall, bonds will collapse, credit markets will freeze, layoffs will explode, stock markets will implode just like 2008. But this time, governments won't be able to bail everyone out. This is the second pin. The geopolitical shock, the unpredictable trigger that ends the illusion. History shows us something uncomfortable. Financial systems never collapse peacefully. There is always a shock. In 2020, it was the pandemic. In 1973, it was the oil crisis. In 1914, it was the spark that ignited World War I. Now look around 2025. Tension with China over Taiwan, Middle East conflicts, oil supply risks, a deeply divided U.S. ICE, election cyber threats, energy crises. Any one of these can freeze markets, spook investors, and force liquidation across the entire world. This is the third pin. The real truth. The trigger doesn't matter. It never mattered. Because the collapse isn't caused by the trigger. The trigger simply reveals the instability that was already there. A match doesn't create gasoline. It only ignites it. And right now, the global system is soaked in gasoline, debt, delusion, leverage, overvaluation, complacency, blind optimism, false stability. It only needs one spark. And once that spark hits, the fall follows a chilling, predictable blueprint. The same one seen in 1929, 2008, and now 2026. Brace yourself, because that blueprint has already begun. Every major crash in history, 1929, 2008. The dot-com burst had different triggers, different narratives, different villains, but the sequence of collapse that never changes. Not once in the last 100 years. What you're about to hear is the exact same five-phase pattern that destroyed fortunes in the past and will destroy millions more in 2026 to 2027. And the scariest part, we are already stepping into phase 1. Phase 1. Initial shock, mid-2025 to early 2026. This is where denial dies. The first big crack appears. Maybe it's a regional bank failure. Maybe a commercial real estate giant defaults. Maybe a debt-laden corporation collapses overnight. Or maybe a geopolitical spark sends fear across the global markets. Markets fall 10 to 15% in days. News anchors panic. Twitter explodes. Politicians promised everything is under control, but nothing is under control. This is only the first domino. Retail investors get nervous, but they don't sell. They hope. Hope is always strongest right before the disaster. Phase 2, the false recovery, spring 2026. This is the most dangerous stage. Markets suddenly bounce back. Analysts cheer. Headlines scream crises over. The economy is strong. By the dip, people celebrate. Investors pile back in. Politicians claim victory. The Federal Reserve makes small rate cuts to calm everyone. But underneath the surface, defaults are quietly spreading. Leverage is tightening. debt bombs are ticking louder. This false hope is what kills millions financially. They walk straight into the jaws of the real collapse. Phase 3. The Cascade Summer to Fall 2026. This is the real crash. Defaults explode across commercial real estate, corporate debt breaks, credit freezes, banks panic, liquidity disappears, and margin calls ignite a bloodbath. Leveraged investors are forced to sell. That selling triggers more selling. That selling triggers even bigger selling. This is called cascading liquidation, and it is the most violent force in the financial world. Markets don't just fall. They plunge 50%, 60%, even 70% in some sectors. This is the moment history remembers. The moment people panic. The moment governments lose control. Phase 4. The panic bottom, late 2026 to mid-2027, fear reaches maximum intensity. Unemployment surges, banks fail, governments scramble, corporations collapse, retirement accounts evaporate. Families lose homes. This is the stage where the world asks, what just happened? How did we not see this coming? The Federal Reserve slashes rates to zero if inflation allows. Emergency stimulus is pumped out. Bailout talks dominate every headline. But none of this prevents the bottom, because the bottom is psychological. It happens when people lose faith. And only after the last forced seller is wiped out, only after the last wave of panic selling, does the market finally stop falling. This is also the moment where quiet fortunes are made by those who were patient, by those who kept cash, by those who understood the pattern. Phase 5. The long, slow recovery. Late 2027 to early 2030s, stability returns. Slowly, confidence rebuilds. Slowly, jobs recover. Slowly, but markets, they may not return to 2025 levels until 2032 or even later. Why so slow? Because the tools that saved the world in 2008 are gone. Debt is too high. Rates are too tight. The system is exhausted. This recovery will be the slowest of our lifetime. But for those who understand the pattern, this isn't the end. It is the beginning of the greatest wealth-building window in decades. Because every collapse, every single one, creates a massive transfer of wealth. From the unprepared to the prepared, from those who panic to those who stay calm, from the emotional to the strategic. The final chapter will reveal exactly who wins, who loses, and how the greatest fortunes of 2026 to 2027 will be built. Brace yourself. Every crash destroys wealth, but it never disappears. Not a single dollar. It simply moves from the hands of the unprepared into the pockets of those who saw the pattern. This is the final truth of every crisis. Crashes don't make people poor. Crashes reveal who is already vulnerable, and the 2026 to 2027 collapse will create the biggest wealth transfer in the last 100 years. Let's break it down. Who loses everything? The same group that always suffers first. The middle class. They trust the system the most. They believe government promises. They hold their wealth in overpriced homes, retirement accounts, high-fee mutual funds, debt-filled lifestyles when markets crash. Their savings fall, their homes fall, their jobs vanish, their debt stays. This is why every crisis crushes the middle class first, the overleveraged investor. These are the people who borrowed to buy stocks, borrowed to buy houses, borrowed to buy opportunities. When margin calls hit, they lose everything in seconds. The emotional trader, they buy the top, they panic at the bottom. They never survive a real crash. Who survives? Those who understand the pattern. People with cash reserves. Cash isn't weak during a crash. Cash is a weapon. It is optionality. It is oxygen while others drown. People with hard assets, gold, silver, real assets with no counterparty risk. These survive inflation, seizures, and panic. People who reduce their debt in a collapse. Debt becomes a noose. Those who cut their liabilities early stay both liquid and safe. Who gets he-she this part is uncomfortable, but true. Every collapse means new millionaires and even billionaires. History proves it. 1929 crash. Joseph Kennedy shorted the market. Came out $50 million richer. 2008 crash. John Paulson bet against subprime mortgages. Made $20 billion. Warren Buffett bought Goldman Sachs and Bank of America during peak panic. Turned crisis into fortune. The 2026 to 2027 playbook. Who will win big? The winners will be the few who sell early. Before phase 3, they keep cash. They keep patience. They wait. By the panic, during phase 4, when fear is when insiders buy silently, when the news says this is the end. That's when the next decade's fortunes are created. Hold quality through phase 5, not hype, not trends, not gambling, but assets with real value, strong balance sheets, low debt, real cash flow, essential industries. These rebound the strongest when recovery begins. The one thing you must remember this entire documentary: every warning, every chart, every historical pattern boils down to a single truth. The crash is not coming. It has already begun. We are inside the early stages of the pattern. The bubble has formed. The cracks are visible. The leverage is maxed out. The ammunition is gone. The timeline is unfolding. And now, the only question that will matter in the history books is asterisk. Asterisk, will you be on the losing side of the wealth transfer or the winning side? Asterisk. Asterisk. Because 10 years from now, people will look back at 2025 and say they should have seen it coming. But you saw the pattern. You understood the blueprint. You heard the warning. Now the decision is yours.